Joining us to get across the market open, David Lane joining us from Odd Minute. David, happy Wednesday to you as we digest essentially the first day of the Trump presidency. What have you heard that may be likely to affect markets?
Thanks, Andrew. Yeah, well, as you said, it's all about Trump today and possibly for the next 4 years or so. But certainly a very big focus on the new executive orders that Trump put into play, but then also a bit of interest in what he didn't put into place. And in particular, it was the tariff into play on day one. There was some discussion about potentially investigating some trade discussions, and China's already come out and said that they're going to import more. So we could well be, or markets are certainly hoping that we could well be looking at a more peaceful introduction of tariffs or a bit more discussion on trade.
So just taking a look at what happened overnight. In fact, tech stocks coming off. Interestingly, Tesla and those EV-related stocks coming off with the prospect perhaps that Donald Trump could withdraw those subsidies for EVs, despite that very close relationship he has with Elon Musk.
Yeah, well, that was certainly the interesting thing that, one of those executive orders that he did put through was the reversal of a lot of the Biden incentives for electric vehicles. So, yes, even though Elon and Donald Trump are very close, wasn't able to take that. But, I think long term we have seen a change in the way that, that the world is looking at vehicles, and that electric vehicles will continue to be a growing part of the market, perhaps not as strong as what we thought it could have been a couple of years ago, but it will still be part of that picture. But definitely, Donald Trump is talking about fossil fuels and drilling more oil, and still having that as part of the energy picture.
Now, AI, that thematic certainly continued to strengthen with news potentially of Trump's endorsement of an investment in AI that's likely to benefit the likes of Oracle and SoftBank.
Yes, fairly large deal that's I think almost happening as we speak. But big investment in AI and AI infrastructure and data centers. So positive certainly in the short term for Oracle and SoftBank. We saw those share prices rise. Although there's no direct comparison here in Australia, we might see a bit of a positivity towards the likes of NextDC and DigiCo here in Australia, which are building out that data centre and infrastructure here in Australia and also in Asia as well. Both companies are expanding in Asia. So long term, there's definitely a significant increase in demand for data, and AI will continue to be a theme that we're talking about for a long time to come. So I think that those businesses will benefit from that longer term. And obviously in the US, the likes of Oracle and SoftBank will also.
So, David, if you do want exposure to the Trump trade as such, what's the best way of doing that, do you think?
Yeah, I think for Australian investors, probably the best way to get exposure is through an ETF and getting exposure to the broad market, the S&P 500. You can do that through a number of ETFs, but one that we like is IVV. That gives you a direct exposure into those 500 companies. Another way to play that is through the NASDAQ index. And there's an ETF, NDQ, that gives you a more focused exposure on those technology companies. They're probably some of the ways that you can do it directly. We also like investing in quality companies, and they've really come to the fore over the last few years and will continue to be the case. So an ETF like Qual, QUAL, provides you exposure to a number of those companies, including a lot of the Mag 7 stocks, but they go through some filters as far as their financials are concerned.
Now, David, given the focus on trade and tariffs, how's that likely to play out, particularly as far as resources are concerned, given the effect on China and therefore Australia?
Yeah, well, we've seen our resource stocks come down fairly significantly over the last 12 months or so, particularly the majors. I think that it will be a slight short-term positive. BHP announced their production results yesterday. That was quite a robust result. So I think that we are getting to a point where those companies are reasonably good value, and some of the concerns about China may not be as extreme because we have seen some growth figures coming through from China indicating that they're still growing at about 5%. And potentially, if we move into a world where the tariffs aren't as extreme on China, that could be a bit of a positive as well. But it is very early days, so probably wouldn't be betting on the fact that there will be no tariffs. But it could be a bit of a short-term positive for the resource stocks here.
So, ahead of the local session, what are your expectations today, David?
Oh, it looks like it'll be a fairly positive day. As I said, the lead in from the US was positive across the board. Those tech stocks and the AI theme will be a positive. So I think short term it'll be a bit of a positive for the markets, but yeah, it's a long 4 years. I wouldn't necessarily be betting on daily announcements from Trump. You really need to be looking at the prices that you're paying for stocks, and we are still fairly expensive as far as both the Australian market and the US market. So, yeah, don't get caught up in the euphoria. Still look for a little bit of value.
Well, and you're not really going to find that in the banks. They continue to rise. Uh,
Yes, yeah.
what, what's your view on the financials at the moment?
Oh, look, they're very overpriced. Certainly the four major banks. We think that CBA in particular is trading at a particularly high premium and shouldn't be trading at that level. It is always difficult though to convince people to sell their CBA shares, and you really do have that momentum of index players and superannuation money coming to the market. So it does underpin the share prices to a certain extent, but certainly as far as new money is concerned, I wouldn't be looking at the four major banks. There are some financials that look more interesting and probably have better fundamentals and even some better growth. So I'd probably be looking at at some of those rather than the major banks.